Hello, everyone, and welcome to the Oklahoma Venture Forum podcast. I'm your host, Kyle Golding. I'm here today with Robert Gay, CEO of Otos, Inc. Otos. I got to make sure to say that right because it's an interesting concept. It's interesting stuff that you're doing. So we're going to explain to everyone what it is. We're going to talk about machine learning and neural network algorithms. Most people call that AI, right? And how it works with stock portfolios, investment objectives, income generation, and answering the question, what drives this stock? The great question that everyone wants to know if they're investing in the stock market, right? So give us the full detail about what Otos is, what it does, how you come up with this, a little bit of your background, and let's have a conversation about what people can expect when you pitch to OVF coming up very soon.
Oh, okay, tremendous. Well, maybe a little bit of background would be helpful.
Certainly.
So I spent a pretty long career, nearly 20 years, as a quantitative analyst on Wall Street and was pretty well liked. I was, top ranked quant analyst for 5 or 6 years. And so I had a lot of experience in dealing with the existing data. Mm-hmm. And what I found was that the data was becoming increasingly corrupted by different kinds of activities, like changing accounting policy was an important one, okay, or changing corporate structure was the much more common one. And it began to emerge in the 90s as companies shifted away from building themselves internally to building themselves by making acquisitions and divestitures.
Sure.
And so comparing this company's financial statement this year with the financial statement last year was no
apples
longer,
and oranges,
exactly,
right?
Yeah, okay. No longer
that makes
valid.
sense.
So the data began to become corrupted. And of course, as soon as it's corrupted, it's much, much less valuable, right? A single corrupting observation in a 25-period time series just completely destroys it.
Right.
So you got to get those corruptions out of there. So what I did was, beginning in 1995, the SEC, after having required companies to provide quarterly and annual financial statements since 1932, began to require them to post them on the internet.
Okay.
And so what that did, give me a source document.
Okay, there you go.
So I wrote this little machine learning algorithm that takes the financial statement in and it reads the line item and it grabs the data values associated with that line item, both from this year and from last year. Well, that financial statement is supposed to be comparable, right? So if a company makes a divestiture or an acquisition, they adjust last year's numbers to reflect that change in the structure. So now we have the numbers that they reported this year for this year, the number they reported this year for last year, and the numbers that they reported last year for last year.
With the variance.
Exactly.
Right.
So that gets us an opportunity to differentiate between how the company changed and how the numbers changed.
Okay.
And eliminate those distortions.
Okay.
Well, all of a sudden, things brighten up again, right? So now we've got more reliable variables.
Now we're back to apples.
Exactly.
Okay.
And so we can compare things like how fast is this company growing and what's causing it to grow, and is there anything that the management's doing to make things look better than they really are, and what's happening to their inventories. And we're able to do this in a time series format. So we're able to measure how these things change through time.
Mm-hmm.
Well, then we're interested in, okay, we know how they change through time. What influence do they have, or what relationship do they have to the share price? And so if we can discover that 95% of the time when inventories go up, the share price goes down 6 months from now, then with that level of confidence, we can make a pretty confident decision.
Right.
And it's that decision confidence that I was after. And I sold that for many, many years to some of the biggest financial institutions in the world. And what happened was that the investing world shifted about 20 years ago away from their traditional approach, which was to build a portfolio for a client,
right,
towards passive management, where you basically buy the whole index.
Right.
And so there's no finessing, right? You're guaranteed a mediocre result. And for years and years and years, a mediocre result was pretty good.
And for the person who wasn't deeply educated in investing, a mediocre result was good for them because it was a result and it was safe and predictable, etc. For the common investor.
That was the story that they were told.
Right.
It's turned out to be rather different than that in the last couple of years.
What we're told and what really happens are
well,
always
exactly.
two different things.
And you've also got to be careful that the major incentive to move to passive management was that it reduced the cost of your investment manager.
Right.
So he didn't have any interest at all in your future. He's purely interested in whether or not he can reduce this amount of time he has to spend on your account and increase the fees that are available to the investing institution.
Benefits them, doesn't benefit the consumer.
Exactly. And so now we're beginning to get an idea over the last couple of years of what the damage that's been done is. And people really do need to shift back towards building their own portfolio and forget this passive management nonsense.
That comes along too, though, with changes in technology, obviously access to the internet and smart devices, et cetera, that a lot more people are interested in managing their own portfolio.
Precisely. And the problem that we run into when we ask people the question, why aren't you managing your own assets, is threefold. It's, first of all, it's too complicated.
Sure.
Secondly, it's too time consuming. And thirdly, I'm afraid of it.
Sure. It's very intimidating.
Exactly. And it's I call it a conspiracy of complexity because it's intended to occur for you as so complicated that you really do need to hire somebody.
Then
and
it's
pay
worth
them
the fees necessary.
Exactly.
Right? Yeah, sure.
Which, of course, is complete nonsense and completely contradicted by the historical record.
But most people just don't know that.
Well, most people don't know it, or they do know it, but they just don't see an alternative.
Sure.
And so that's what Otos is about. Otos is a machine learning algorithm that learns about your behavior and learns about the behavior of all companies out there so that it can sort of match the two.
Okay.
And so the first thing it does is that it monitors your transaction record. And through the transaction record, we're able to deduce how much risk you're willing to take on.
Okay.
What kinds of things you buy, how frequently you trade, this kind of thing tells the AI an awful lot about your preferences. But what's most important is that it can also measure how those preferences change. And that's a very, very important component because
that's interesting.
If you've sat down with your financial advisor, chances are you had a conversation about your risk preferences and you would have said something that they wrote down carefully and included in their notes. And that has never changed.
Right.
Well, chances are your risk preferences are changing all the time.
Right. Because your life situation changes all the time.
That's part of it. But the other part of it is prices change.
Too.
Right? So when the cost of risk goes down, you really want to take more on.
Sure.
When the cost of risk goes up, you want to take on a little less. So that's where the monitoring of your risk preferences and the monitoring of your financial situation is part of what Otos does. And so then Otos, mining all of this data out of all of these corporate financial statements and isolating what the most important variable is for every company, it can match that up with you and say, oh, gee, I noticed that you own Tesla at $250 a share, trading at an all-time high with sales growth down and gross profit margins down and operating costs up and profitability deteriorating and inventories building and all these negative indicators ringing a bell that, hey, maybe this position in Tesla is a bit big because, of course, if you purchase Tesla, very possible that you purchased it 1/10 of its current price.
Right.
In which case, it's now 10 times the size in your portfolio than any other position.
And the great question always is, right? Hold or sell.
Well, exactly. And so if we can get some confidence around making that sell decision, then there's all kinds of ways that it can be implemented. Easiest way is just to go out and sell the darn thing. But there's all kinds of alternative ways that you can diminish the risk in the portfolio by just simply instructing your AI to buy a put or write a covered call or buy an index future or something that will mitigate the risks in your portfolio associated with this unusually large position.
And you have options.
Well, you do have, of course you have options, always have options, but Otos will identify the best one.
There you go.
And so part of what Otos does is identifies the transaction that's likely to have the best outcome. And of course, it's got 30 years of data to base that decision on, right? So Otos has been around through everything, right? Otos knows. Otos knows, exactly. And the original data, which was provided from a third party, goes back to 1967. So Otos has seen these inflation surges before. Otos has seen it, the central banks and monetary authorities institute policies to slow inflation. Otos has seen increases and decreases in corporate growth. Otos has seen it all. Now, one of the most fascinating things about what's going on now, of course, is that there was a huge virus wave, right? And the virus hit, there was this huge plunge in corporate growth. Not all companies participated, but most did. And then a year later, of course, there's a huge rebound from that. So now we've got this incredible wave in here that, as we know, same as if you'd thrown a boulder into a pond, the first one's going to be an implosion and then a big explosion, and then you're going to get these ripples, right? Well, we're seeing the ripples now.
Okay.
And so that's a tremendous confusion about what the state of the world is, right? So people are, you read the financial news and people are saying, oh, there's going to be a recession. Well, no, there's no evidence that there's going to be a recession. In fact, quite the opposite. The system remains tremendously overheated. And so it's much, much more likely that we're going to have to see much more aggressive monetary policy in order to slow the system enough and choke out what has been 30 years of successful speculation. All right? Doesn't matter what you speculated in over the last 30 years, it's been right. Doesn't matter whether it's housing or cryptocurrencies or stocks, or if you were an aggressive investor and were willing to speculate, you made money. It was like falling off a log. Well, that environment's very much changed now.
And whenever you have the highs, you're going to have eventually have some lows.
Well, exactly. But the whole problem is the eventually part.
Because when is that?
The timing is everything.
Right.
You got to get the timing right. And of course, what happens is people react rather than anticipate.
Well, panic almost. Sometimes.
Well, and sometimes you've got that going on too. But the important thing about AI is it'll send you a signal that there's something deteriorating here 6 months before it has an impact on the price.
And AI is not emotional.
And of course, the AI is not intended to be emotional, and is going to give you the most likely successful outcome for you.
Okay.
And measures it over time. And that's what's so important, because one of the things that we know about the investing space in general is nobody tells you whether you're doing well or not well, because they don't want to get into the conversation. Whereas Otos very, very carefully measures its impact on every decision, measures its incremental return, its success frequency, and all these kinds of numbers. And so by isolating on a company by company basis which variables are the most influential on the share price historically, we're able to assemble a decision algorithm, if you like, that is most likely to give us a positive outcome.
So as a company, Otos, what you do as the CEO, running the company, how you're moving through the world today, and what your plans are for the future. Where is your state right now? How are things going with it? And what are your plans for expansion and development of the company itself? And what is your vision for the next, say, 5 years?
Thank you. Well, the difficulty is the revenue model, right? Because every revenue model out there is exploitive.
Sure.
So what I want to do is to create a revenue model that is, first of all, makes you money. So people say this to me all the time. If the AI is so damn smart, why can't it make you money? Well, of course, it can make you money. But first of all, it needs to learn a lot about you. Mm-hmm. So the intention for the future is to take this machine learning algorithm that's working in corporate financial statements and shift it over to individual financial statements. When I talk to people about their investing problem, they typically give me those 3 responses. And then they say, I'd rather let my guy look after it. It's just, it's
just safer and easier.
Exactly. And besides, I get somebody to blame it on when things go badly. And of course, the cost of that is absolutely huge. Right. Much, much, much bigger than people realize. Over your investing lifetime, you give up half your wealth to your investment advisor. And
which almost eliminates the reason you're doing it. If you're investing in order to gain,
well, exactly.
If you're giving away too much of it, what's the point of even taking on the risk at all, right?
Exactly. And so there's a real incentive, I think, for people to get more involved with their own investments. But when I speak to people about what their financial concerns are, they say, well, I can't keep a budget. I just can't seem to make my income meet my expenditures. My planning is terrible. And so they want support around their day-to-day financial activities.
Sure.
So let's take our AI and move it over into your general ledger, into your bank account.
Okay.
So it reads a string of the line items that comes out of your bank account, and it creates a general ledger for you. Out of that drops a budget. And from your budget, whether or not you are generating a surplus determines whether or not you need a plan.
And a lot more applicable to every person, as opposed to just people who are heavily investing in the market.
Precisely. and people who are letting someone else do the work,
Right.
Otos provides them with an opportunity to eliminate that expense. But you're also able to eliminate all kinds of other expenses that people pay without really even knowing them, needless, without even to say about opportunities related to coupons and discounts and cashbacks and all of these things that are out there that people don't take advantage of. $450 billion a year are issued in coupons, and electronic coupons have an 18% take-up rate. Paper coupons have an 8% take-up rate. So there's hundreds and hundreds of billions of dollars in value that is left on the table every year by consumers.
And so many more transactions now are a digital transaction.
Precisely.
The idea of a paper coupon at the retailer brick and mortar is becoming less and less influential. So why not have a tool that can insert themselves in the process?
Exactly.
Right.
And take over this job
Right.
of making sure that you are as absolutely efficient in your finances as you possibly can be.
That's always a good thing.
And then measure the impact that it has. So on a typical, say, $5,000 a month family budget, Otos could probably save somewhere between $50 and $100 by the application of all of these rules, and that's before you even get to the money you're going to save without not hiring an investment advisor.
Yeah, right. There's saving and then there's big savings.
It's real money.
Right.
So the one thing that Otos does after having analyzed your budget from your general ledger is identifies whether you have a surplus or a discount. Well, if you have a discount, you're building debts, which is obviously not
it's a bad
sustainable.
thing. Yeah.
And so what Otos will do at that point is say, well, we need more income. And so it will look for ways, and of course, the more it learns about you, the more it's been interpreting your general ledger,
Right.
the more easy it's going to be for the algorithm to determine, what kind of income generating possibilities could this person make use of.
And I'm going to assume if you have a surplus, it's definitely going to be finding opportunities for you to utilize your surplus in better ways.
Right.
Right.
And so whether or not it's contributing to your short-term savings account, your sort of emergency account, whether or not it's contributing to your longer-term retirement accounts or whatever, Otos will make sure that all of that gets looked after and make sure that any opportunity that there is to make or save money gets applied to your account.
There you go.
And makes us much, much more efficient. But if you think about where AI is going now, AI is, in terms of neural networks, is being deployed more and more by large corporations to use the data that they stole from you against you.
That's right. For their advantage completely.
Exactly.
Yes.
And so what I want to do is to counter that with personal AI.
Okay.
And say, okay, not only is your AI going to be looking after your interests in terms of its knowledge about your financial reality, but it's also going to be interpreting your situation in the context of other AIs.
Okay.
So we can curate the other AIs. We can
make them work for us.
Massage them to make them work for us, precisely.
So how does a consumer do that? How does someone essentially hire Otos? How does that happen?
Well, Otos is available for free registration right now, otos.io. And what we do on Otos right now is to look after investment portfolios. And so it's the machine learning thing, and it's the neural network algorithm focused on individual transaction decision making. So that's where we are now. But those people who are involved with Otos will also be sort of the test group, if you like, for the launch of the personal AI.
Okay.
And to do that, you will just connect up your bank account. Well, AI, right now, you're already connected up through Otos to a brokerage account. So it won't be a big deal to also give Otos access to your personal
So this is an
bank
expansion of the service offerings from Otos, is from the portfolio side to the consumer
well,
side.
more than that, it's a transition into the new revenue model.
Okay.
Because the old revenue model, fee-based investment management, is increasingly outrageously exploited.
It's a dinosaur.
Oh my God. And so, yes, to put that to bed, if the last thing that I hear on my deathbed is that the last bank is gone, I'm going to go in peace.
That's a big ask.
Well, I do expect to live for a few more years, but banks have been wealth destroyers, both for their shareholders and for their customers, for a lot of years now. And so it's about time that they win.
So anyone listening to this podcast now, watching the video, OVF members or not, and anyone who attends your pitch for OVF, how can they get involved? How can they help Otos? How can they be part of this revolution that you're planning?
Well, this is a wonderful thing about the revenue model, that I'm not seeking investment capital. What I'm doing is seeking registered investment advisory clients.
Okay.
And those clients that I'm working with receive a share of Otos Inc. That is the underlying fintech. So instead of selling you shares and then selling somebody else shares and diluting you, and selling else shares and diluting
selling
you
them everywhere
over and over again,
right.
What we're doing is to create a development model that doesn't have any vested interest, that doesn't have any contradictory interest. So if you work for a big bank, obviously the big bank's going to impose its
they have
make
rules.
money at all cost criteria.
They have rules,
right?
yeah.
If you issue a venture capital,
Mm-hmm.
then you've got a venture capitalist looking over your shoulder,
And they have their own set of rules.
Exactly. And when I talk to people about AI, the first question that I get asked is, how am I going to trust it?
Oh.
So in order for AI to be successful at the personal level, it has to come from a trusted foundation. It has to come from a group of people who are committed to creating this opportunity for the world.
Right.
Rather than some venture capitalist whose only interest is to ramp it up for the next 2 years and then sell it off to some big bank.
Sure.
Right? Contradicts the whole exercise. And so the opportunity to participate is with the investment management client. And I've just moved my practice to Oklahoma City from New York. And so it's a perfect time to get involved. And I'd very, very much like to add some clients to my practice from Oklahoma.
How long have you been in Oklahoma now?
3 years.
3 years. And now you said you just moved to practice. So now you're 100% committed. You're here in the space.
That's it.
So what is, we end every episode by asking this question. What is your advice for Oklahoma-based entrepreneurs? If you're an entrepreneur and living in Oklahoma, anywhere in Oklahoma, and maybe they have a startup or they have a business or they have an idea on paper that they think could become something, what is your advice to them on how to make it really work with what we're doing here in Oklahoma?
Well, I had an answer all figured out. It was going to be automate. So we're going to have to make use of every opportunity that we can for automation. But that doesn't really answer the question about what's specific here to Oklahoma.
Especially if you have a different perspective. You've had most of your career outside of Oklahoma. So I'm very curious what your take is on the Oklahoma entrepreneurial ecosystem.
Yeah, and I think that there's a tremendous amount of enthusiasm.
Yes.
There's a tremendous amount of sort of grassroots support for it.
Definitely.
And there's a tremendous lack of capital.
Yes. Getting better every day, but you're absolutely right.
Yes, and of course the lack of capital has to do with the fact that it's a highly competitive environment, and it's couched in the venture capital model. And the venture capital model, again, is the venture capital firms are intending to make money for their partners. And so the frequency with which they make money for their investees is less frequent. And so I'm wondering whether or not there might be a different funding model out there.
Okay.
That we could get away from this sort of antagonistic capital versus labor kind of approach that's merged over the last 100 years globally, but certainly in the United States, and move back towards something that's more cooperative and more sort of invert pyramid shaped.
Okay.
So we're going to grow it like an inverted pyramid.
That's it. It's an interesting idea, an interesting concept. I think if anyone can figure that out, I think the Oklahomans can do that.
I think so too.
Thank you so much for having the conversation with me today, Robert, on what Otos is, about how to apply machine learning and AI, all of this, and maybe different perspectives on how to produce income and how to share that income, etc. All interesting conversations. A little bit of departure from our normal conversation on the podcast, which I think is fantastic because we need these additional perspectives on a regular basis in order to challenge the system, right?
Thank you.
Thank you so much for being here today. You guys make sure that you check out ovf.org for all the dates when all of our events happening, when you can see pitches like Robert's and all of our regular speakers, etc. So attend our monthly meetings, attend the OVF after hours events, and of course the awards event at the end of the session coming up before the beginning of the summer. And if you remember, don't forget, you have the direct contact information for anyone who pitches, like Robert. So you'll be able to contact him if you want to be part of this AI revolution. Thank you guys for tuning in this time. We'll see you next time on the OVF podcast.